Good morning, everyone. I'm Greg Faranello, head of U.S. rates for AmeriVet Securities, and welcome to Monday Minutes. Let's field a few questions. What's the latest narrative on the repo market? Regulation versus bank reserves. On JP Morgan's earnings call last week, Jamie Dimon was clear. You're giving us the reserves, but you're restricting how we use them. Conversely, New York Fed President Williams later in the week said the unintended consequences of bank regulation would be accommodated through the recent balance sheet expansion announcement. So regulators have to work with banks, and banks have to work with regulators. So what we see going forward is more of a give and take relationship, reserves versus regulation. What are the key themes driving interest rates at the moment? The reality is the same themes that have been driving rates for the better part of this year. Global trade, Brexit, thought of recession, negative interest rates, inverted yield curves. Now we have hope of a breakthrough on Brexit. We have hope of a breakthrough on global trade. And what we're seeing are interest rates slowly edge up and yield curves steeper. We still continue to see those themes as dominating the market in the coming weeks, along with the ECB this week and the Fed the following week. How is the Fed leaning heading into this month's meeting? The Fed's been playing it pretty close to home. When you look at the Fed speak, though, there has been daylight within Powell's inner circle, with most of the Fed speak over the last 2 to 3 weeks for another interest rate cut at the end of this month. We see the risks now, largely the same risks as we saw back in September, and if anything, slightly more with the negative and weakening data in the U.S. market. So we see the probability of where we're priced right now, mainly skewed for another cut at the end of this month, as very rational. I'm Greg Faranello, and this is Monday Minutes.